Personal finance practice problem using Excel. Automobile operation cost calculation and projection. Prepare to get financially fit by practicing personal finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're down here in the practice tab as opposed to the example tab. The example tab, in essence, being an answer key. Information's on the left-hand side. We're going to populate that into the blue area on the right-hand side. The information's related to automobile expenses and costs. We want to use it to calculate what the automobile expenses and costs will be, and also to make projections into the future. To do so, we're going to be breaking them out between variable and fixed costs, a useful tool when we're thinking about projecting changes that might happen in the future, possibly changes in a situation where we're thinking we're going to be driving more in the future, possibly related to a new job where we need more use of the automobile or less use of the automobile, and we can think about that as a relevant factor in those cases to our decision-making process between different items. Also note that we're not focused in on taxes here, and if you're driving for a job that's your own business, like a Schedule C sole proprietor type of business, it's possible that you can deduct the automobile expenses, usually the main two ways being a mileage method or the direct cost method. But to do so for taxes, you got to make sure that you're tracking the information the way the tax code wants you to be tracking it as well. So for taxes, if you were to be doing a Schedule C business, you want to keep that in mind as well to make sure that you're picking up the information necessary to get the deduction you could take there. All right, so the information we have, we're going to be breaking this out between, say, variable costs and fixed costs. So that's what we're going to be trying to determine. And let's color code them. The variable cost green, fixed costs are going to be some other color. So we're going to this is going to be a fixed cost, actually. Let's make the other color blue. That's going to be the annual depreciation. Now, the depreciation is something that's not a cash flow item. When you think about depreciation, you're taking the cost of the car and allocating it over the useful life. That's an accrual type of concept that we're considering there. It's useful because it shows us the use of the car over a certain time period and the allocation of the cost of the car as we use it. But it's not a cash inflow or outflow, so you want to keep that in mind when you're thinking about your budgeting type of thing, difference between cash kind of item and a non-cash item. We have the current year's loan interest, so we're going to be picking up the loan interest related to it. Now, loan interest, we're going to assume that that's going to be the same from period to period. It's going to be a known cost that we're going to basically be paying instead of a variable cost. In other words, it's not going to be changing with the level of miles that we drive. Same with the depreciation. Usually we allocate the same amount of depreciation based on a straight line method or a timing method, even if we drive the car more or less. You could think of it in a situation where if I'm driving the car more, I should depreciate more using a mileage type of method for depreciation, but that's not the traditional method. So we're going to assume it's just a fixed cost here. Insurance, that's another one that's generally going to be basically a fixed type of cost, because no matter how much we drive, there might be a point that if we drive a lot more, and if we're going to another job where there's a lot more driving, the insurance cost could go up. But generally, the insurance cost is going to be what it is no matter how much we drive. We've got the average gasoline price per gallon, so that's going to help us with our variable component typically, because that's going to help us to determine the cost of the gasoline as we drive more or less. Parking tolls. Now, this one's a little bit tricky because you would think that parking tolls is kind of a random type of thing. It's not going to go up exactly with more driving. It's not like you get so many tickets per mile or anything like that. But with more driving, you're probably likely to get more tickets. So we're going to make that a variable cost as well, as opposed to a fixed cost. It might be more like a mixed cost or something like that. You could assume, hey, I drive over the speed limit all the time, so it's just a matter of numbers in terms of how many tickets I get or something like that. But in any case, we're going to say that that's going to be variable. We have the annual mileage. Annual mileage is going to be helping us out with the calculation of the variable costs typically, because we're going to base our variable costs on the change in mileage. And then we got the miles per gallon. That's going to help us out with our variable costs as well, so that we can break down the costs on a per gallon basis. And it's not doing the right click. I'll do it up here. And then we got the license and fees. So license and fees are typically going to be fixed type of costs because they're not going to change if we drive more typically. And then the oil and repairs. This is another one that's not directly related to the number of miles we drive, but the oil is somewhat related because we know that we're going to have to change it basically every 3,000 to 6,000 miles or something like that. So it is going to have some variable component with relation to the driving. And you would think the repairs would as well, although the repairs can be a little bit more, difficult to approximate what they will be. Now let's calculate the actual costs. And so we'll try to break this out into our variable and fixed. Now note, when you look at the variable and fixed, this is going to help you out with your projections going forward into the future if you're doing budgeting or if you're trying to think about, a different job that has more driving or something like this. So this is going to be first, the gas cost is going to be the first thing that we most likely think about with cash going out after we once have the car. So we have the annual miles that we drive. Annual mileage is going to be equal to 15,600. The miles per gallon, we're going to say, is 24 miles per gallon that we get here. And you could usually get that from your owner's manual or something like that, how many miles you get per gallon. If you don't drive like a maniac with the stopping and going stuff, there's a difference, in other words, between the miles you might get in a stop and go environment and the miles on like a freeway, and how fast you go, and how fast you want to start and whatnot. So we have then the gallons. So gallons are going to be then the gallons we had at the equal to the 15.6 divided by the 24. That gives us 650 gallons that we will need. And so then we're going to say, okay, well, how much do gallons cost? Because they charge us per gallon. So charging per gallon, we're going to say $3.50 per gallon, unless there's some kind of oil crisis or that could obviously fluctuate and whatnot. But we'll say $3.50 on the average. We're going to say font group underline. And then we're going to say that this is going to be the gas cost. Gas cost. Putting this in the outer column, this is going to be equal to the 650 times the 350, giving us a cost of the 2,275. Selecting these cells, let's do an indent, alignment, indent, and then the gas costs, alignment, indent again. So then we're also going to put in this category the oil. So let's put the oil in here as variable. And so now we're going to assume we have just simply the oil costs from our accounting or bookkeeping records that we could basically add up at the 850, and then we're going to use them or make them a variable cost so that we can use them for a projection out into the future. So I'm going to say I know that I spent this year $850 on it. I'd like to break that down to a per mile number that might help me with my projection into the future. And then we've got the oil, we got the parking and tolls. This one is that funny one that we're saying is going to be variable. We're going to try to break down our parking and tolls to a per mile calculation as well, which is, kind of a little funny because that's a little weird because you wouldn't think you get more tickets per mile. But, the more you drive, the more likely you're going to get a ticket because you're always driving like 5 miles over the speed limit. You know it. You are. So if you drive a lot, then maybe, your tickets go up at a similar rate. So that's going to be then the total variable costs, and that's going to equal the SUM of these. Put an underline here. We're going to say font group underline. So there's going to be our variable costs. So these are the ones that are going to change to some degree, we believe, with the level of use of the car. That's why we're going to say they're variable. Now, the fixed costs are the ones that are not going to change with the level of use. That's going to be the depreciation. Remember, if you're thinking, how am I calculating the depreciation? You're using like a straight line method. You might get it from your tax professional to use it. You might not use depreciation if you're on a cash basis because it might not be something you're looking for if you're just looking for a budgeting purposes for a cash flow budget. But we're going to pick up the 3,200 depreciation, and we have the current year's loan interest. Now, this is basically a loan. So if you're thinking about like for taxes, what are the auto costs? You may not be putting the loan interest in the same area for financing because it's basically a financing thing, but in terms of something that we had to finance in order for it to get the use of the car, we can calculate it, as an auto expense in that sense. The categories get a little bit funny there. We got the insurance. So the auto insurance, that's going to be a fixed cost because it's not going to change with the level of driving per se, generally, as a general rule. And then the license and permits also not changing with the level of driving in general, that being the 148. So that's going to be our total. This is total fixed costs. Summing that up with the equals SUM, shift 9, and picking up those numbers and enter. Let's put an underline under the 148, font group underline, and then we can say that's going to be our total annual operating costs, which are going to be equal to the 3875 and or plus, same thing, 5038 about gives us about 8913. Now, the tempting thing to do then is if you're trying to project out what's my cost going to be next year, you could try to say, well, if I think I'm going to drive 20,000 miles next year instead of the 15.6 that we drove this year, how much is that going to cost me? You could say miles at let's pick up the current miles at the 15.6, and then say that would be the cost per mile, which would be equal to the 8913 divided by the 20,000, and add a couple decimals. We're talking 51 cents a mile or something. Font group, let's put some brackets around this. And then, of course, you can multiply that times 20,000. So projected costs, or miles are going to be equal to 20,000. There's going to be a problem with this, by the way. And then we'll do it a different way. So I'm going to say font group underline, and then say underline, and that's going to give us our projected auto costs, which would be equal to the 5.571 times the 20,000 or so, and that gives us our 11,472. Let's put some blue here. However, notice that if we do that, that's the tempting thing to do, but like these costs aren't going to change, with the number of miles. So the miles went up, and these costs don't change, but these do. That's why we're going to break it out. So this probably is a little over what we would think it should be, because we basically increased the fixed costs with it, and the fixed costs aren't going to change. Depreciation is going to be what it is. The loan interests are going to be what it is. Interest is going to be what it is. I can drive like 1,000,000 miles maybe, and I don't know, that might change some of them, but I can drive like a lot of miles, and that wouldn't change the cost. So that's why we're breaking it out. That's the point of the fixed and variable costs. So let's do a projection out here and try to break out our variable costs on a per mile basis. So we're going to say the gas costs, for example, gas cost per mile. We could say that the gas cost was equal to, we calculated it now, of the 2275. This is going to be I should call it gas cost per mile. That's better. Okay, and then we've got the miles that we drove. The miles, annual miles, equal to the 15.6. The 15.6 on the annual miles. And so that's going to give us our gas cost per mile. We'll try to break it down to a per mile basis. I'll put that into the outer column here. This is going to be equal to the 2275 divided by the 15.6. Let's put some decimals here. Number group, decimalize. 146, 1458 about. Let's do some indentation. Selecting these three cells. Home tab, alignment, indent. This one again, alignment, indent, ultra vase another time. And then we're going to say oil changes or charges slash repairs per mile. So this one we're going to say the total cost of the oil charges last year we says was $850. Let's break that down to a per mile basis by dividing it by the annual number of mileage that we drove, 15.6. And then that's going to give us our oil. Let's give us the total oil. Or no, this is going to be, well, let's just copy the same thing. Sorry, I'm getting a little confused. I got confused, but I'm back now. The confusion has passed. We're going to say this is going to be the 850 divided by the 15.6. And then we'll put some decimals there, number group, decimals. So there we have that. Let's put some indentation, alignment, indent. This one also, alignment, indent. And then we'll do the same thing for parking. The parking tolls per mile, which is the most dubious of the ones as to whether you can break them down into a mileage kind of component, but we'll give it a shot. We're going to do it. So then we're going to have the total cost is going to be equal to the what was the cost of the parking, 750, and then the annual miles, which is going to be equal to the 15.6, and that's going to give us the total there on that one. And we'll put that in the outer column. This is going to be equal to the 750 divided by the 15.6. Adding some decimals, number group, couple decimals. So there we have it. Let's do some indentation. Alignment, indent. This one, again, alignment, indent. And that's going to give us our totals here. So we'll put the total on down below because that's where totals go, down below. And then let's select these three. Let's put some underlines on these three by going to the Home tab, Alignment, and Underline. And let's put an underline here too, underline here. Now we could sum this up. That would give us our variable costs equals the sum of these items. And so we can see that these costs we're going to say are changing, number group, adding decimals, pennies, are changing by this variable rates, which we could say all the variable costs together are going to change by the 0.2484 or so. And these should change by 0.1458 about. This is our approximation. So if we're then saying that we're going to be driving 20,000 miles projected next time because we're going to take that new job or something where we got to drive more, then but we're like, that's going to cost us in our automobile cost. So let's figure this thing out. Is it worth it considering we're going to have to pay for automobile costs because they're not going to cover that in this particular job, apparently. That's our scenario. So we're going to then say the 0.1458 times the 20,000 means we're going to project out then costs of the 2,917 as opposed to the 2,275. We got the 20,000 here as well. So we think the oil is going to cost us the 0.0545 times 20,000, about 1,090. And then we think that the tolls, because we're going to be driving more and we're always driving over the speed limit. So we're going to have to get more tickets just as a matter of probability, apparently. We're calculating to be the 962. So we could sum this up equals the SUM like so, 20,000. And we can also calculate it this way with the totals, the 0.2484 times 20,000. So this gives us a nice number to do our projections on. We could just say, the variable costs in general are going to cost us 0.2484 about, we think. And so if I increase to 20,000, 30,000, I can change these in relation to the miles we drive, whereas the fixed costs will not change with relation to the miles we drive because by definition, they're what's called fixed in nature, meaning they don't change. They don't vary. That's why the variable costs called. So we're going to say this is going to be equal to the annual depreciation. We could just copy these down then because these don't change because they're fixed. We fixed them. They're like a rock. The rock doesn't change. The rock stays just the way the rock is, even though we drove more miles. So we're then going to drag this one down, put an underline down here, font group and underline, and that's going to be the total fixed costs, or we call it the projected fixed costs, which are the same, equals the SUM, sum, shift 9, up arrow, holding down shift. There we have it. So then we have our total projected costs, we'll call it, which is equal to this number plus this number. And so now we can see we came out to a slightly different number than the 11,427, right? Because we're breaking out between fixed and variable. And anytime you're doing a projection into the future, that same kind of concept. It's not a perfect thing. It really bothers a lot of people that like things to work like perfectly. Obviously when we break out between variable costs, things don't change. Like oil changes aren't going to change exactly related to the number of miles we drive. It's more like a stepped up, tier up thing. Every 3,000, 6,000 miles, you can get more detailed if you want. The question is, how detailed do you want to get versus the information you're getting? And the same with the parking tools. It's not perfect to kind of break it out, but it's better than just trying to take the total here and put that on a cost per dollar, this percentage rate, because it's taking into consideration costs that do not behave the same. So our goal is to try to break the cost out by behavior, whether it's going to change with output in this case being more driving. Output could be, more money or something in the future. Anytime you can tie those things together, you can do your projection based on breaking out the costs that will change as the cost driver, we often will call it, increases over time, and those that will not change, which should give you a more accurate projection as to what's going to happen in the future.